Hello and welcome to FML. This is the 7th episode. How are you today, Emery?
I'm pretty good, Nicole. I actually just realized I do have a funny anecdote in no way related to finance that I can tell for the introduction of this podcast.
Oh, okay, so we're not even going to pretend that this is spontaneous anymore.
No. We obviously have to plan this. You think I'm pulling statistics out of thin air? No.
No, I meant the first shot, like.
Oh, sorry. Well, we didn't prep this story. This is actually spontaneous.
Okay, go for it. What
Okay.
happened this week, or what's your story?
Well, it's still in progress in that I ordered a pair of shoes, right? And the apartment that I live in is in a house. Like they took a house and split it up into apartments, which means when we get packages, it's super annoying because people ring the doorbell to the house, but not to either of the apartments. So more often than not, they never deliver anything to our house. And I got really sick of this. And I found out on a bunch of websites, you can like order stuff and send it to a pickup location for a package. And the closest pickup location to me is like a newsagent's, I don't know, like down on the corner, right? And I was like, sick. I bought shoes that might be ugly, but I have to see them in person to determine how ugly they are and to figure out if it's like quirky ugly or ugly ugly. Anyway, so I have ordered this pair of shoes and they got delivered on Monday. I have now gone twice to this new newsagent's. Like, and online it says they're open until 8. And I rocked up there at like 6 twice, both times closed and locked up. So the question is, am I ever going to get my shoes? And does this newsagent actually function ever?
That is unfortunate. But like, wait, so why didn't you, are you afraid of your neighbors robbing the shoes?
No, what ends up happening is like the On Post comes to deliver them and then no one answers the door because they don't ring either of the apartment bells. So we can't hear it. So then they just take it to the fulfillment center, which is like half an hour from my house. And I'm like, I don't want to trek all the way there. I'll trek to the newsagents on the corner.
That makes
But
sense.
now it's maybe worse. Like I'm never going to get these shoes.
It's bad. So other than tracking down newsagent opening times, how else was your week?
It was all right. Like we've recorded 2 exterior podcasts this week. It's a very busy week podcast wise. I'm scheduled to record 5 this week. That's a bit much now.
Yeah, you're very in demand.
Yeah.
We're glad to have you. We're very lucky to have you on FML, really. But yeah, we did do. So we've done one with a podcast called Take Two with Debbie Shaw, which is very exciting. And then we've got another one scheduled for tomorrow at 4:00. Friday at 4:00 is a tough time, but in fairness, the podcast is based in New York, so we did have to kind of suit their times, and that's called Successful AF. So if you do hear myself and Anne-Marie on those 2 podcasts, we'd love some comments and feedback as well. And like you'll listen to us there on the upcoming episodes, and we'll share the links on our Instagram because they're exciting. This is their first 2 external pods, isn't it?
Yeah, I think so. Also, I did not know that the recording is at 4 p.m. on a Friday.
It's in your honestly, sometimes I feel like your PA. It's in your calendar, Anne-Marie.
Yeah. You kind of are like you have to organize all the recordings, but like damn. Okay. Well, we won't be going out today.
If Anne-Marie calls in sick tomorrow, we all know why. So then my weekend, I should say, was really good. Thanks for asking.
Sorry.
I was down at the Algarve in Portugal. I was in a town called Lagos, which is lovely. If any of you have ever been there, you'll know the lovely beaches it has, like the coves. It's quite like a surf place, really holiday destination. It was great. Everyone was like very good vibes. I just love being in holiday destinations because I feel like everyone's in a good mood. Like, because I live in Lisbon, so I was on a weekend away, but like everyone was probably there for like a week or 2 or traveling around, and that was one of their like stops. Loads of Americans there actually. It must be like a massive like place for them to go. Which
I like that you were like shout out, some of your people were there.
Yeah. Well, actually, you know what? We should say this because I've always wanted to ask you this. You know the way loads of Americans get slagged for saying they're Irish, but you are actually Irish, but you have an American accent. Are you kind of afraid to say, "Oh, I'm Irish," because you're going to get like what everyone else gets when they usually say that?
Yeah, I tend to always. I would never like outwardly. If someone asks like, "Oh, where are you from?" I would say I'm American. Like I wouldn't outwardly say that I'm Irish, but I then like qualify it if someone is is like, oh, like, how long have you been living in Ireland? I'm like, oh, I've been here for 7 years. They're like, oh, and I'm like, and my mom is Irish and my whole extended family lives here. And then they're kind of like, oh, okay. And then they're like, so you're basically Irish. And I'm like, yeah, but I allow them to reach that conclusion. I never.
Yeah. That's kind of sad that like that's just been taken away from you by annoying Americans that like have their great grandfather's cousin was.
Yeah, had a layover in Dublin Airport. Like, didn't like. Yeah. Yeah.
Okay.
No, but it's all right, because if they get there by themselves, they're like very excited and welcoming. But you don't want to go in straight off the bat and just be like, "Oh, I'm Irish," and they're like, not sounding like that. You're not.
Yeah, because when I promote this podcast, I always say like, "Oh, it's an Irish pod. It's an Irish pod," and I wonder, people like, "Well, Nicole's only Irish, and Marie's not Irish." Yeah. So this is it, guys. Anne Marie is also Irish.
Well, you could do an Instagram poll.
Yeah. What, like, who's that? What, like, do you think Anne Marie's Irish or not?
Yeah, that could be how we determine citizenship in Ireland from now on. We'll just do Instagram polls.
Perfect.
Yeah, there you go.
Okay, so getting into the more serious stuff, we're going to let you know what this episode is about. So it's all about gender economic inequality and how the pandemic has set women back around 30 years in catching up to men. But also, Anne-Marie's kind of found that the crisis, aka the pandemic, has also encouraged more women than ever to start investing. And I think this whole women inequality thing is quite topical at the moment with everything going on in the US. But anyway, yeah, Anne-Marie, you've done lots of research on this. And I actually think we both kind of looked into this topic when we started the Women in Investing series, March 2021 for Women's History Month. So we'd only been in the company like a while, and we were like, oh, like Women's History Month is coming up. Like, this is a good opportunity to share content about like female investors and the gender wealth gap, pay divide, and all those kind of things. But so kind of tell us why the pandemic was kind of so harmful for women.
Yeah. So, well, there are kind of three main trends that we saw during the pandemic that seem to be exacerbating the wealth gap and slowing down progress and closing it. It's probably also important to say kind of right off the bat that the process of closing the wage gap prior to the pandemic is expected to be very, very slow. I think I remember reading estimates from the world from, I think it was the UN. They were like, oh, we predict it'll take over 200 years. And we were like, what? So that rate has gotten even slower, which is a big bummer. But those kind of three, it's a big bummer. It's maybe more serious than that.
Big bummer, yeah.
Sorry about that.
We should be laughing about this. This is about us.
No, like, I know, yeah. But there were three trends that went on during the pandemic that exacerbated issues that were already existing prior to the pandemic, slowed down this rate of improving the gender wage gap. So number one is that women were often needed at home, which meant that they left paying jobs to go fulfill unpaid labor tasks in the home. We kind of saw this across the board. It was actually pretty interesting. I saw some figures in The Economist that talked about that the highest concentration of this type of behavior was actually in Central and Eastern Europe, and in a lot of cultures in East Asia, the Middle East, and in Africa, there was like actually very little change, which is probably a reflection of how those communities and those cultures were already existing prior to the pandemic. I think that they're often a bit more of collectivist thinkers. They think more about their communities, so they tend to have more support structures in place when disasters like these tend to strike. And I think in more individualistic societies, it ends up being that only certain individuals within a family unit are expected to take time off work. So I thought that was pretty interesting. But overall in the world, it has been found that 10% of women worldwide had to exit the labor force in order to care for someone in their family, which is pretty significant. And 26% of women reported a loss of work during the pandemic, compared to only 20% of men globally. And that was taken in September of 2021. And really, like, this it forces women out of the workplace, but then also I'd say it would make it even harder down the line for them to rejoin the workforce. I'm sure as anyone who's kind of taken a break from working knows, when you go into that interview afterwards, you have that big gap in your resume. That always seems to be a talking point. And so I would say, well, we continue to see the impacts of this probably for the next several months, if not several years. So that was kind of the first big trend. The second one is that women disproportionately tend to work in sectors that experienced heavy layoffs during the pandemic, particularly in the early days. This is stuff like the service sector or hospitality. Women tend to work in those roles more significantly than men. And so, again, being laid off initially in the pandemic, having this big gap on your resume, and then needing to re-enter the workforce. And to be honest, a lot of those sectors are now the sectors that have, big unionization movements are talking about a compression of wages, not being able to keep up with the cost of living. And so I would say probably for a lot of impacted women, they're having to make that difficult decision of, do I even want to re-enter this sector that I was working in if I know that it won't be able to sustain my way of life? So that is also a big long-term factor that will continue probably to play out for the next 5 to 10 years. And then finally, we have the trend that's always humming in the background that we had before the pandemic, which just kind of general misogyny when it comes to paying women, which can be seen, in an overall trend, but even when we take a look at individual sectors. So I went and had a look at kind of differences in pay within, certain qualifications or within certain job titles. And something that was pretty astounding was that PayScale found that the largest uncontrolled pay gap for women is actually women with MBAs, which you would think, oh, you have a master's in business, you think you'd be quite well off. But they actually only take home 76 cents for every dollar that a man makes with an MBA. And the smallest gap can be found within law. So a woman with a law degree will make 89 cents for every dollar that a man makes.
That's really interesting.
Yeah. And
I wonder why law.
I read, and some people and some analysts believe it just has to do with the kind of structure differences within these sectors. So apparently within law, they have very, very structured ideas of pay. Like you go in being told, here, you're on this level of the company, and this is the pay that we give everyone on that level. And then it's like quite transparent of, as you move up, this will be your salary. Whereas in business, like working in business or working in finance, there tends not to be that level of transparency.
I suppose lawyers know the law.
Yeah,
but
probably. Yeah, to be fair, they are probably worried about some sort of lawsuit.
Yeah, I was going to say that as well. Like, I think maybe if like female lawyers found out, they would be like, "I'm suing you."
Yeah,
you're done.
Probably. And I guess also like within the business world, I don't know. Like whenever we discuss like business and finance, and these type of, it always makes me think of Mad Men, like men in suits in the 1950s. But oftentimes,
love that show.
It is a great show.
Yeah.
Oftentimes the pay in those sectors tends to be done via bonuses, which are often done on like a more discretionary basis. So that can be things like working longer hours, or something you hear really commonly is, oh, men are better at asking for raises, which is kind of a ridiculous thing to like place the burden of the wage gap on women not being proactive enough and not being involved enough in their jobs, because that topic came up maybe 2 weeks ago on a Stock Club podcast when we were discussing Sheryl Sandberg from Facebook, because she was kind of an early pioneer of that form of feminism. Like, hey, women, like, solve all your problems by just speaking up more. And so I went and actually read up on a study that found that women and men actually ask for raises the same amount, like with the same frequency. Women are just given them less frequently. So
I believe that.
So it has nothing to do with like women advocating for themselves, and 100% to do with just our general sexism in the workplace. So those,
and I also think a little bit about it is like men are more likely to go to like social events and like, go on like golf, like maybe with their managers and do those things, whereas women are more likely to have to go home and maybe look after children, look after the house, look after maybe an elderly parent or things like that. So I remember reading that like that's another factor as well, that like men have more time to socialize, and then when it comes to getting a pay rise, who's the person that gets it? It's like who management knows better, who they're friendlier with,
has the face-to-face time.
Yeah, that's another like small, I'd say it is a small contributing factor, but I'd say it does happen a lot like in the business world or like the investing world, where they do kind of like play golf and stuff like that.
Like you see, it's kind of a cycle. Then it becomes this thing of, oh, women don't have the opportunity to be as face-to-face as management because they need to go home and fulfill like unpaid tasks in the home. Oh, but those unpaid tasks also mean that they can have, are oftentimes more vulnerable to needing to leave the workforce in order to fulfill something. You just go round and round and round, which I'm really like, the pandemic is a stressor to a lot of societal factors that we know are going on, like are going on anyway. Like our society and our economy are not set up to provide equality to women at the very foundation. And so this is just kind of exacerbating those conditions and highlighting them more so to us.
Definitely. So we've kind of talked about maybe inequality in pay and things like that, but specifically like for the pandemic, you were saying that more women started investing during the pandemic, but I guess we should kind of talk about why they weren't already, like why there is such a gap or like a difference between how many women invest, how many men invest. I think it is like 80% of investors worldwide are men. And like obviously that like that's different because it is global. I'm not sure what the stats are for Ireland specifically, but like I do know myself, like, well, whoever, like when I go on social media, who do I see talking about investing in stocks? It's usually men. Like, you know, it's getting better, but yeah, I think there's lots of like reasons why women weren't investing in the first place. But I suppose one of them is like our risk attitude.
Yeah, kind of that desire to like make money and then hold on to it, and not kind of wanting to involve any sort of risk, just leaving it in a savings account. Which I really think, I remember doing research on that, and I think it often comes down to an educational issue. I remember reading it was a woman who like had started a foundation for providing investment and kind of finance education for women in high school to kind of prepare them to go off and go to college and then like get proper jobs. And she talked about that within family units, it tends to be that financial conversations and life planning conversations tend to happen with sons and not daughters. And she was like, that is like step one of fixing this problem, is when your kids are young and they're beginning to become aware of money, you have to start talking to them about, you know, investment when they're 16 or 17. You know, this can't be something that you're trying to backtrack on when they're in their 20s and they're already making money.
Yeah, for sure. And I think we've definitely said this on a podcast before, but you know, that notion of like, I say, okay, risk might stop us from investing in the first place, but when we do get started, our attitude towards risk actually really helps us, because it helps us become a better long-term investor, because we're not gonna, you know, act irrationally, and we're gonna like maybe not invest in as many like risky assets like meme stocks or NFTs. We can kind of like see the future benefits of holding stocks longer and things like that. So do you think that's kind of the main reasons why women are really good long-term investors? Is it just our tendency to be kind of risk adverse?
Yeah, I also think it's just, it could also be the thing of just not having the time to obsess over it. Like I'd say the way that most women approach their finances is, right, I'm going to sit down, I'm going to figure this out, I'm going to make a plan, this is the amount of money I'm going to invest every month, or I'm going to save. We're going to set that up, we're going to automate it. I'm going to pick out my stock every month, or my S&P 500 index fund, and we're just going to do it. That'll be it, and we're done. I'm not going to think about it.
Yeah.
Whereas I think like the more time that you have to like obsess over your stocks in like the big thing that I know Emmett is always talking about and trying to tell people is like, you don't need to check your investment account every day. And so I'm wondering, is it just the way sometimes that women approach investing, that they think of it as a tool or an avenue towards retirement or towards, you know, having enough money to send your kids to college, rather than sometimes I think approaching investing as a hobby means that it can be kind of difficult to be a long-term investor because it's always on your mind.
Yeah. And that's kind of what we tell like users at MyWallSt, is that you can just block out the daily news, you know, to some extent, is that you shouldn't be obsessing over the news. Like obviously, like we report on the big things, and then it's important to check back in with your investments, like say after earnings reports and stuff like that. But you don't, if you're a long-term investor, you don't really need to be watching the stock market every day and keeping up with all of the news, because there's way too much. And I think an important point is that, you know, there's a lack of representation in investing for women as well. You know, it's still considered quite a boys' club. But yeah, we actually talked about this point kind of in detail in episode 1 of FML. So if people are interested, check out that episode. It goes into kind of in depth about women investors and why we're amazing, basically.
There you go.
So Amber, when we kind of were chatting about doing this episode on, gender inequality, you had this phrase that the pandemic was a real moment of economic disparity.
Mhm.
Can you kind of elaborate on what that means?
Yeah. And I think like we're in a moment of economic disparity across the board. Like, I don't think it's just concentrated on women, but I think it is worse for women. And what I mean by it is I think the pandemic has pushed women into one of two economic extremes. Like, they're either doing very well or they're doing very poorly. And
Right.
this really comes down to the labor conditions that the pandemic caused. So women who prior to the pandemic would have been in the upper middle classes to the upper classes were often working in jobs that provided them, with a good salary and benefits. And they were also probably the jobs most well suited to adjusting to a work from home environment. So it meant that, for these individuals, they really weren't all that impacted by the pandemic in a monetary sense. They just went home and continued to work their jobs and continued to get the salary they always had. And in some ways, from a savings perspective and investment perspective, benefited because they didn't have anywhere to spend their money. They couldn't go on vacation. I suppose, we did see a big increase in furniture spending and spending at Home Depot. So obviously they were doing some sort of renovations, but I don't think there was as many opportunities to kind of spend on entertainment per se. So we in the post-pandemic world see a tremendous amount, and I mean a tremendous, like trillions of dollars are sitting in savings accounts from people in the upper and upper middle classes in the United States. So these women have done quite well. But on the other side of the spectrum are women who, like, as we mentioned, are probably working in the service industry or hospitality, who could have been laid off at the beginning of the pandemic, and were kind of kept ticking over by things like the stimulus checks and the child tax benefit, both of which have now expired in the United States, unfortunately. Particularly the child tax benefit, I think, has a huge impact. It's something like tens of millions of children were lifted out of poverty because of the child tax benefit, and it has been allowed to expire by Congress, which is a real shame.
Yeah.
And now we're in this terrible environment of inflation and wage stagnation. And it means that these women are really getting left behind because they're experiencing a pretty terrible economic squeeze. And it's really ridiculous sometimes for us to have this conversation of like, oh, women, like, why aren't you investing? But like, they're not making enough money to save. Like, they're not making enough money to invest. Like, and they're living paycheck to paycheck, and it's only going to get harder if inflation continues. So that's kind of what I mean is we can kind of stand around and celebrate more and more women investing, but undoubtedly those women that are investing were those that were quite well off prior to the pandemic, and the women who weren't so well off are now, I think, really struggling. I think this is going to be a quite a turning point in terms of economic disparity between the classes, which has been an issue probably for the last several decades in the United States.
Yeah, I definitely agree with that. Like, I think, it's easy for us to say, because we do have maybe a little bit of spare income, like, oh, just invest $20 to $100 a month. But for a lot of people, that's too much. They don't have it. So what can they do? And then it's just like really, really unfair that they're just kind of like trapped out of the benefits of investing. And that's how you create generational wealth. And then the cycle just continues.
Yes, definitely.
So for the very lucky few of us that could start investing in the pandemic, why do you think so many women, that's when they were like, right, I'm going to start now?
Yeah. Well, so just kind of some stats on that. So roughly 2 in 5, 42% of current female investors took the plunge either in 2020 or 2021. That's really significant. That's a huge proportion of female investors. And that data was collected by eToro, which is like a massive investing app in the US. I actually think they're available in Ireland as well. And a lot of analysts have said that it really boils down to time. Just having the benefit of time to be able to sit down and learn what investing means, what the benefits are, how easy compound interest is, how kind of, hands off and automated you can make your investing if that's what you choose to do. And so that is very lovely to see that, like, the problem isn't, I don't know, like sometimes we hear these ridiculous theories about, oh, women aren't interested in finance and they're not interested in investing because biologically they don't like math or something, like some really horrible like idea. But like, no, it's just
those
like
comments.
like women, it's just like women have to fulfill more unpaid labor in the household and therefore do not have the time to like sit down and be due diligent and do their research and feel good about an investment decision. And that is fair enough. The other interesting,
and we're like, because of generations having like not as much money as men to
Yeah.
invest, then it's not like a thing that's commonly discussed in like female friendship groups, and it's not something that your grandmother is gonna sit down and talk to you about. Like, it's more likely that a guy in the family will talk to his dad or his grandfather. So like there's so many reasons. It's not down to like, oh, we just don't want to make money. Like, of course we want to make money.
Yeah.
Like, that's why you see like there's like more women than ever are becoming like CEOs, more women than ever are putting off having children to later in their life because they want to focus on their career and their business, and they want to make money. Like, that's definitely not it.
Yeah. I also think like some of it can be credited towards just access to investment, and investment education has dramatically improved probably in the last 5 to 10 years. Like, I'm always thinking about Emmett discussing when he and his father first got into investing, which investing truthfully is not popular or common in Ireland. And it definitely wasn't when Emmett started investing in the 90s. And he was like, yeah, you'd have to call the broker on the phone in New York, and it was $20 to make any kind of trade or buy any kind of stock. And he was like, yeah, I'd be buying like 50 euros worth of a stock and paying a 20 euro fee on it. And I was like, what is the point of that? And so really having like fee-free brokerage apps, I think has really kind of opened up the market and kind of leveled the playing field for individuals. So I think that has also been beneficial, and that's beneficial for everyone across the board, men and women.
Yeah. And I also like, it's not just that like people had more time during the pandemic, but like we also had like, the meme stock craze, and that got invested more popular for everyone. Like not just men, but like women were also seeing things on like, social media about these stocks going like so high, and it just became like it just made investing so much more popular. Like it was crazy. Like MyWallSt saw like really high downloads when all this was going on, maybe from people who wanted to kind of do the opposite of what investing in meme stocks is. Like they want to like to know about investing, but like do it like less risky.
Yeah, it was definitely a time where investing was brought to the forefront of our public mind, and everyone was going, oh, what's this going on? But apparently that happens all the time. Like, interest in investing is very cyclical, where when the market is doing well and stocks are up, everyone's getting ready to invest. Everyone has money set aside. Everyone's opening a brokerage account. And then as we enter a bear market, which we currently are, we are in a bear market, people pack up shop and they're like, no, why would I invest? The market is always falling. I can't make any money. And it's just allowing that kind of short-term pessimism to take advantage of you. So yeah, it definitely was something like that. However, silver lining. So all of these women started investing in 2020 and 2021 in a great bull market. Everything was going up. Great time to be an investor. Feels pretty bad right now. But eToro surveyed these women, these new investors, and exactly half, 50% of women in the survey said that they plan to hold their investments for 6 years or longer. So that is putting them on track to be a nice buy and hold investor. So that is nice to see. Half of them are thinking, right, long-term horizon, what's a stock I want to hold for at least 6 years? So that was good to see.
That's great to see that they're kind of on that long-term investing mindset.
Yeah. So
that's what we always try to push.
There you go. Yeah.
Yeah. Okay, so now it's time for the Girl Boss of the Week.
Girl Boss of the Week.
So, Anne-Marie, who is it this week? Who is our 7th Girl Boss? Well, actually, no, it's not. Sorry, it's not 7 because we've had a few interviews where we didn't do it.
Yeah. Well, okay, so it was hotly contested this week. We had many public failings. So
yeah, we had a debate about who this should be but we have to keep it stock related and not political.
I know. There's 6 individuals that sit in a branch of the US government that we considered for the title this week, but instead we decided to go with Robinhood CEO Vlad Tenev.
What did he do?
He lied to a House committee that was examining Robinhood in the wake of the GameStop fiasco in January of 2021. Basically, he was called in front of all these representatives in February of 2021, and he said that the company was, quote, always comfortable with its liquidity. But it turns out in an investigation that was released this week, that was untrue. See, Robinhood teetered dangerously towards default when its daily collateral deposit requirement suddenly skyrocketed in the wake of GameStop and AMC and all that stuff. The Depository Trust and Clearing Corporation, which is the DTCC, they are responsible for clearing and settling all U.S. equity transactions. Basically, what happens here is when you buy and sell a stock, like it's not an instantaneous thing that has to be, it's cleared over a day or two.
Right. Yeah.
So basically, January 28th, the DTCC called up Robinhood and say, hey, you owe us $3.7 billion, which at the time Robinhood had only deposited about 700,000 to the DTCC. So
I don't
it's a lot
really
of
get
money.
that. I don't really get how do they owe them money though?
It was basically because like the way that the short squeezes happened was that a lot of money was moving really, really rapidly back and forth. And like it was a tremendous amount of trading volume. And so basically like Robinhood was allowing so many trades per day that they weren't keeping up with the amount of money that they needed to deposit in order to basically ensure that they had access to the public markets. And so, they needed to deposit. They were given like 6 hours notice and they were told you need to deposit $3 billion right now, which basically like the money sits there. It's basically just to prove that Robinhood has the liquidity to cover
all those trades.
Yeah. And Robinhood did not have $3 billion to give. They said we could give you 600 million, but that's as much as we can. So
which is like a drop in the ocean compared.
And that was not enough. So actually the DTCC granted them a discretionary and unexplained waiver. That's like what it said in the investigation documents. No one really knows like why the DTCC granted them this. Probably because they were worried of some sort of economic meltdown, if we're being honest. And they were able to get out of it. But this means that Vlad Tenev lied in February of 2021 in front of the House committee when he said, oh no, everything is fine. We were always comfortable with their liquidity. And a bunch of emails from within Robinhood came out and it showed that he was basically told that the company was teetering towards complete collapse. Their chief operating officer, Gretchen Howard, sent him an email in which Tenev stated, telling Tenev that the company needed to act quickly and have extensive crisis management. So it's not doing well.
The amount of scandals that Robinhood has been in, like in the last
shocking. Shocking. And it really does boil down to the fact that like their business model just doesn't work. Like they only make money and do well when people are trading really riskily. Like when they are trading on margin or they're, going after meme stocks or they're buying Dogecoin. They make a tremendous amount of their money just selling and buying Dogecoin. It's ridiculous. They're just
And there was a really sad story about like an 18-year-old user who was buying on margin with Robinhood, and he racked up so much debt that he actually like took his own life, and then the family sued Robinhood.
And it was an error. He didn't owe that money. It was like it had glitched, and he like it's just it's so ridiculous and hypocritical because Robinhood loves to brand itself as we're the brokerage of the people, like we're bringing equality and access to the markets, and like in truth, no, like Robinhood needs people to act completely irresponsible in order to make money, and it's just ridiculous.
It like they are the company kind of to blame for this idea that investing is gambling. Like
most,
you know what I mean? Like because investing isn't gambling, but when you do it like that, it sure does look like it, and it's really reckless and dangerous. So they've really but they're still so popular. Like it's crazy.
They are decreasing in popularity. I think their latest quarterly report, it was like usage was down like 75% or something like that. So the bear market is kind of wiping out a lot of those meme traders from 2020 and 2021. So hopefully they don't get too scared of investing.
Yeah. Okay, so that's a wrap on this episode. We really hope you enjoyed, and please send us in any questions that you'd like us to answer on the next podcast.
Please tune in 2 weeks' time when we will be discussing, I think, the second coming of NFTs. And by second coming, we mean we're gonna maybe tear them down a bit and re-examine them.
Yeah. And then if you want to follow us on socials, please do. We would really appreciate it. You can find us on Instagram at Fun My Life Podcast, on Twitter at MyWallSt HQ, and on TikTok at MyWallSt, or on our very brand new TikTok account dedicated solely to FML, which is at Anne-Marie and Nicole FML.
And finally, if you are ready to start your investing journey and are looking for resources, check out MyWallSt's Getting Started podcast anywhere you listen to podcasts, or download the MyWallSt Learn app. Both are linked below. If you want access to our list of stocks handpicked by our analyst and lots of other interesting finance and business content, download the MyWallSt app and create your free account today.
So that's all from me and Anne-Marie. We hope you enjoyed listening. Bye.